Hello guys, welcome back to my channel. Don't forget to like, share, comment, and subscribe. Investing calm, the Dow closed lower Wednesday. Talks swung widely between gains and losses as the Federal Reserve resized interest rate and lifted out outlook on further rates hikes, pointing to a period of higher for longer rates. The Fed raised by and signaled that there was more room to front-load rate hikes after forecasting rates to reach about by year-end. That is well above the projected previously. We've just moved into the very lowest level of Fed made by Recession Powell said Wednesday. Following the rate hike, in my view, there's a ways to go. The Fed also projected that a recession might possibly be avoided despite its need to spin up rate hikes to bring inflation under control. But economists at Jefferies checked that it was hard to believe that the Fed is capable of pulling off such a decline and landing of the economy into a gradual climb towards somewhat lower growth, only middle higher unemployment, and on-target inflation. Bond markets were quick to price in the growing risk of a recession as the Treasury yield curve further inverted. The 20-year Treasury yield over 10-year Treasury yield inverted to buy-in. The prospect of higher for longer interest rates weighed on growth sector of the economy stage, and consumer generally fell more than 1%, with the latter dragged down by travel and user stock and rising geopolitical tension. Russian President Vladimir Putin announced the partial mobilization of Russian citizens for the war in Ukraine that likely and annihilate hopes of sooner rather than later and the conflict. The plow parade gains fall a day earlier, while Metaplatform stitched close almost higher track was up more intraday despite reporting a weather than expected. Lost in the fourth quarter, a slowing growth budget consumers demand. With bus cuts its price target and switch to from warning that visibility and to run extremely low right now. Tao said that the cheap valuation of the company was the only reason. It was not more negative on the stock. General Mills, in charge of the border market Malaysia, raising more than 5 after raising its outlook on performance following better. Investing the Dow in trapdoor of higher for longer rates and governments shine investor find a lot to like and bottom remains elusive. Even as the Federal Reserve rates and sense technology start tumbling, it only gets harder to stay away from the sector. On the one hand, there has much to like is now chapter that end peak. Many chip companies like Apple Inc. are still feeling their recovers with cash and internal outlook show no sign of a significant blood. But that said, the market chatter going into Wednesday monetary policy meeting was that was hikes likelihood of a receive rally in Teach if the central bank, as expected, rises in the market rate by basis point. Turns out it was not that staggered the of more and showed not avoided until the dust list that just is not option for most individual investor. Given that industry is by far the largest in the only, it can be career ending. Stock pickers thus are gravitating toward qualities with durable business or stock cost of their page look for business at all. Director of Trading Performance Trust Capital Partners, Microsoft marks stuff that people pay for. Apple shell billions in consumer goods, and it is hard to replace those companies. The are getting slammed in the stock market. Owner dependent on its loss, its follow this video company. As long as real yield in the bond market keeping the Nasdaq, while the index earnings multiple has come down a lot. It's falling from very inflated level, but stock pickers are finding plenty to buy. It has gotten cheaper, but is not cheap, said Alex Young, chief investment strategist and Massible, a quantitative research firm. until it feels like the Fed is able to take pause on tightening tech is not likely to be leadership sector. Maybe that's all from me. Thanks for watching. Don't forget to like, share, comment, and subscribe.